Happy Friday, everyone. It's 8:04 a.m. Chicago time on the 25th of January 2019. Sorry about the delay in starting. We lost a few minutes here. YouTube's just been behaving a little bit goofy lately. Uh, the service is not as stable as it usually is. I'm thankful that it's free, but it's been acting up a little bit lately. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Welcome to another weekend, the last Friday of January 2019. This morning, the risk sentiment is risk on. We've pushed into the 2661 area in the S&P. We are gapping up versus yesterday's trade. And in true market prove you wrong, haha fashion, yesterday S&P built a nicely shaped Gaussian balanced profile, which I indicated yesterday that we hadn't seen in a couple of weeks. Anyway, risk on. The leader this morning is the DAX on European earnings, followed by the Nasdaq, 88.5 points. Euro stocks follow that. These are up 1.65% for the DAX, 1.31 for the Nasdaq, and 1.12. Fairly decent. Volatility has come off in the futures. Dollar is taking a bit of a hit. It's down 39 cents. And of course, the bonds, the notes, the yen, the euro bond are all down, clearly indicating the risk on sentiment. As far as what's likely to interrupt us, other than the continuous news cycle and the stuff that's going on with the federal government, the fact that there's no budget, and federal employees, a good portion of federal employees, about a quarter of the workforce in the government, has just missed their second monthly paycheck, and people are resigning from their positions in various departments. Just a complete embarrassment and tragedy, really. But it's in the news, and it's as it continues, it's likely to impact the economy, and we may see that reflected in prices. We may, I don't know if we will. So some numbers this morning didn't come out because of the shutdown, and that goes on. Just keep an eye on or an ear out on your news feed. There's just stuff flowing all the time. There are no releases today, so let's just move quickly into our review segment. So yesterday, the primary scenario was expected to be a dip into 2631 or so, and then ultimately to push to 2661, which is where we are. Essentially, scenario one from yesterday was the overnight trade from Globex today. This plan played out almost perfectly this morning. We didn't get scenario one or scenario two. It was a mix. It was an inside day. And so overall, it was a lower high, higher low, completely balanced. So neither one of these scenarios played out, and in fact, none of the scenarios I generated played out at all. I didn't plan for an inside day given the range of the prior day. I didn't expect an inside day, so not much done with it yesterday. But here we are. If we break this down, whoop, we can see that we have this pretty sweet Gaussian profile here, completely balanced. The market closed right to almost on top of the point of control, in line with the prior day. Very, very symmetrical profile. The market tested higher and tapered off, although there's a little nub here at the top, and tested lower and tapered off as well. So a very classical balance type day yesterday. Again, we had the VWAP, point of control, mid, open, all in the same spot with the close just beneath that by about 2 points. Very compressed, a very compressed market. Um, the thing to talk about right now is this beautiful break from balance. So this is yesterday's balance right here that we were just talking about. And we open right up and we push in the Asian session. We push up and consolidate, and then we continue to push higher. We have a P-shaped profile, a legit P-shaped profile where we moved steadily away and balanced. We moved out of the prior day's range. So this is balance moving into imbalance, and we've been pushing the high. There's a fair amount of liquidity all the way through up here, but the market has happily pushed through it. Here's what the liquidity looks like. I changed the colors here a little bit. This is the last print. The dots represent, I believe I changed this to 25 or better. No, it's 50 or better. Okay. So those are the big prints that came through. The white is the shades of white, the kind of monochromatic range you see there is liquidity, and you can see that we've been pushing into liquidity and trading through it. There's a fair amount left up top. Up in the, if you recall from 2 days ago, another big target above was 26.66. We see the liquidity sitting there. This is also a stock zone for me. And then up from there is 26.70 is where we have additional liquidity below 26.54. So the entire overnight session has been a consolidation drive, as you can see here. Just, push, consolidate, pull back, push some more, consolidate, push some more, consolidate, and it's pushing through all of my cloud note levels on here. So that's the review segment. That's the overnight. Fairly bullish action this morning out of balance. Balance leads to imbalance, and that's how we're shaping up this morning. So a quick reminder that it is like Friday. Please take a moment to find and hit the like button on YouTube. I'd appreciate that. So this would help me out. In addition, before we get into our scenarios, next Thursday at 4:30 Eastern, there's an AMA. It's also on the page that the Trader Bytes on. You'll see a box there with a link. Please register. This is an AMA that's going to be focused on execution. I'm going to sift through the questions. And by the way, that page that you're referred to is also a spot where you get to contribute your questions. So let's look at that for a second, just to make sure everybody knows where to go. Wow, the website's just getting slammed. It's very slow. All right, so this is the page right here. You can click on this button to register. Hang on. You can click on the button to register, and then you can submit your question right down here. So if you scroll to the bottom, you'll find a form that you can fill out and just submit your question. If you have a chart or whatever, you can attach it. If it's relevant to execution, then it'll be addressed with priority, okay? So let's take a look at where we are today and what we're likely to do going forward. So the expectation today, given that, look at where we are, we're reattacking, even though it looked like we were starting to one time frame down. Let me change the color here. We're starting to one time frame down. Okay, lower highs, lower highs, lower highs. We're breaking higher, and what this looks like is a classic flag breakout pattern. I do expect some sort of reversion this morning. The inventory is long. The overnight inventory is mainly long, and so is Delta. And so the expectation is that as we open up, let me scroll up a little bit, make space. The expectation is an open auction out of range. We are going to be templating, and we're right on top of this low volume node up here. This is where this 2661 and a quarter comes from, this stock zone right here. This is exactly our high. Our high is a single print from the 18th or so, from a week ago. And so we're opening here. We're likely to test that overnight high. I'm expecting it to revert back towards yesterday's range, impulse, push, consolidate, and then to start drifting up. The last week's close, 2671.50. I'm looking for to push through into the 75, 76 area before it settles in. Okay, this dashed red line right here is the one volatility sigma up close to close. We're expecting that most of the time the market will close inside of that barrier, inside of that band, I should say. It's not a barrier at 2676. So my expectation is it's likely to drift up there and then pull back and close somewhere near where it closed last week. So again, gap up into last Friday's range. The secondary is an open that completes what we're doing overnight. Impulse is down, comes down to the prior day's high, consolidates at the prior day's high, moves back up, and then just holds steady into the close to possibly drift into the close. That's the secondary scenario. We're out of balance, so I'm going to look at scenario 3 as well. Scenario 3, open, test, drive early, consolidate in this 2668 area, and then just start to walk itself. An open test drive has higher range, is expected to have higher range, and we're likely to push through into the 2688 area. That will give us about almost 30 points of range. Scenario 4 is test up, drive down, but I'm not going to cover that. So those are the key scenarios. So what's my job this morning? Again, the goal with these scenarios is not to try to predict the market and lock myself into a bias, okay? At the end of the day, when you go to trade, when you go to execute a trade, you have a bias. You know, I read people saying, oh, profitable traders can't and shouldn't trade with a bias. Well, bias describes many things, and it's really important. It's really important to understand that a bias is a healthy thing as long as you keep an open mind. So if I come in and I'm looking to short this thing, and my bias is to only short, I'm automatically forcing my brain, without my knowledge, I'm automatically forcing my brain to just look for ideas that support the short side. So I have confirmation bias. My brain is simply going to be a great algo or processing machine that supports that idea. So these scenarios, as you've noticed, it could go up, could go down, could go sideways, right? And that's laughable. For many people, it's this thing like, oh yeah, you've got your bets hedged there. You know, one of those is going to be right. Yes, it is. I hope so. I hope so. But the idea is not that I want to be right. The idea is I'm looking for what could happen when the market opens. So once the market opens and I see that it's having a small pullback towards yesterday's range, it pulls back to say 2653, and then there's a strong impulse higher, I know that I'm looking at scenario 3 probably, or scenario 1, depending on how far it pulls back. If it's scenario 3, now I'm trading from strength because I have a plan. The market is showing us that we're moving in that direction. And now I can more comfortably hold for 2676, 2682, and 2688. This is where the scenarios come in. So it's a lot like a SWAT team that shows up and then the commander of the SWAT team says, just break into the bank and shoot whatever moves. That's trading without a plan. This is more, hey, we're looking to breach from the roof. There's a skylight. We're looking to breach that. If that's booby trapped, then we're going to have a team in the back from in the back entrance, and the team is going to breach, and then this squad is going to turn right, this squad is going to turn left, and this is how we're going to attack the problem. That's what these scenarios are. Now, once we're out in the field and we're surrounding the bank, what's going to happen is going to be uh, out of our control. It's going to be the result it's going to be the result of the actions that happen in the field. And for us, that's whatever the market does. This is why I very often don't trade the first 15, 20 minutes, half hour, sometimes even longer, because I'm not getting an indication of what it really wants. And I want to trade from strength. But once I see that it's not able to get into the prior day's range, now I'm trading scenario 1 and 3. And if I'm getting long, based on whatever method you want to use, a moving average or a fib pullback or order flow or whatever, once I get long, I know that I need to hang on for my targets. And so I'm not so nervous. Once I lay my risk off by scaling out of a portion of a trade, I'm not so nervous. I can hold on and I can watch the trade play out. And then I can show up here tomorrow and say, it was scenario number 1. And here's what happened. And it worked out not perfectly, but close enough. Versus someone who just says, I don't know, it doesn't look like it wants to sell. Let me get long. Okay, I just got long. Now I'm going to take 3 ticks and the market's pulling back and I don't really have a plan, so I'm just going to close the trade only to watch it rip in that direction. Okay, and so that's really what we're dealing with here. The other thing I wanted to discuss that I've pushed off now for a couple of days is randomness. I've been talking about randomness a lot at Convergent, and it seems to have created some confusion. People actually think that the market is random. The market is like people. People do a lot of random things in the moment, but overall we all share similar traits and behaviors as human beings. And the market is the same. It represents people's expectations of future prices today. It doesn't matter if it's a stock, an option, whatever. It's we anticipate some action in the future today. And so the randomness is actually not in the way the market behaves. The randomness is in the outcome of every trade. And so what we don't want to do is approach every single trade from a different, with a random approach every single time. And so the randomness factor is, I don't know, even on a 99% probability, I don't know if the next trade is going to contribute to that 99% or it's going to be contributing to the 1% where it fails. I don't know. But the market historically has this behavior. I expect the overnight high or the overnight low to break 97 or 98% of the time. I'm going to plan a trade around that. That's going to be a key target for me, blah, 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 blah. That's not random. But the outcome is random. And if you approach the market with a plan or no plan, and you're trading randomly in a market that yields random results on a trade by trade basis, you'll spend the next 20 years calling yourself a trader, but not able to actually be financially independent from it, which is what I would suspect everybody's goal is. So just wanted to cover those 2 items. Keep getting asked about these scenarios. People think a lot of times don't understand it, think that it's a waste of time to lock myself in. I'm not locking myself in. I have a plan. I'll let the market tell me what it wants, and then I follow that plan. And in terms of the fact that we are trading randomness, you are kidding yourself if you don't believe that the outcome of the very next trade is absolutely and positively random. There's no way for you to change that or to do anything about it. That's why risk is important, because risk is your only defense, is our only defense against randomness. I hope that helped you today. Good luck, and I'll catch you Monday, but please register for the AMA if you have questions. Take care.